Traders, Dwayne here from DRFX, Forex Swing trading as Daddy Papi in Dukascopy Trading Competition for July 2017. Taking a look at a recent trade that was made on the New Zealand Canadian dollar, where, as you can see here, the market was in the process of forming a consolidation setup on the daily chart, with the support boundary already formed with these two support points and one resistance point already formed, with the market providing us with a double top formation here, indicating that it was ready to form the second resistance point that would allow us to complete the formation of the resistance boundary and the overall consolidation setup as the market eventually makes its way back down to the support boundary. So a double top formation was formed here, and this was followed by a break of this uptrend line that was then followed by a strong bearish engulfing candlestick formation here, which, taking together all of these three signals, was a strong indication that the market was going to be heading back to the support boundary and that we should start to look for a trading opportunity to take advantage of this expected movement. Now, double top formations are very typical when it comes to movements within consolidation. You usually have the market providing us with a first signal, which on its own is not enough to actually start the movement, and this is then followed by a pullback that then leads to a strong U-turn and the formation of a second bearish signal. So this is essentially what took place at the resistance at this area here. The high of this second U-turn was a little bit lower than this one. Typically they are normally very close, but this was a little lower, but nevertheless it was still a double top formation, and the market responded to this signal by breaking the uptrend line here, and providing us with a bearish engulfing candlestick formation. This bearish engulfing candlestick formation also is a very strong signal that we see not only within the formation of consolidation setups, but with any setup that has a downtrend in it. So this is a very strong signal that usually indicates that the market is going to be starting or going to be continuing a downtrend. So double top formation, the break of the uptrend line, as well as a strong bearish engulfing candlestick formation, providing three strong signals to indicate the start of the movement back down to the support boundary. Now, after getting this daily signal, the next step was to take a look at the 4-hour chart to identify a strong stop loss area to use to protect the trade as the market makes its way down to the support boundary. So taking a look at this lower time frame, here we see that the market had created a downtrend on its own here, and in so doing it also created this downtrend line. So we start with the high here, and we take the trend line and take it all the way down to just above where the market formed this low point here. So here we have a fairly strong trend line, and this on its own can be used as an area to protect the trade when it comes to downtrends. And if we find strong resistance points in the form of candlestick formation, in this case we see here an evening star was formed, again another typical example of a bearish candlestick formation as part of a downtrend. We can use the resistance point, the high of this formation, as a stop loss, as an area to place our stop loss as well. So the combination of the downtrend line as well as the resistance of this morning star providing us with a strong area here to place a stop loss. And in fact, this is where I place a stop loss at the 0.9501 level, and then simply waiting until the market pull back a little and this which then provided me with a stop loss of approximately 70 pips, with entry taking place at 0.9430. So just a little above 70 pips stop loss. And the next thing, of course, was to after entry, patiently waiting until the market hit the target. And for these types of trades, where we're trading within the boundaries of a fairly large consolidation setup on the daily chart, where our target is set, well, in this case it was set to 165, 62 pips. Whenever the distance between where we're entering and our target is above, comfortably between 120, 130 and 200 pips, you generally want to allocate a holding period of between 5 to 7 days. In this case, I thought it appropriate to allocate a holding period of 5 days. And as you can see here, the market eventually made its way lower. And after 1, 2, 3, 4 days, the market eventually hit our target here, providing the gain of 162 pips. Now, when it comes to trading within consolidation setups, generally I like to exit the trade just within the boundary that I'm trading towards. So in the case of the support area here, the exit is normally placed at an area comfortably above the support boundary, just in case the market does not actually hit the boundary before U-turning. You'll notice that from time to time the market may not actually hit the boundary that we're trading towards, and that it would U-turn and start the movement in the opposite direction without actually hitting the boundary. This can be very frustrating for traders, because what you have in those situations, the market would probably come just within a few pips of hitting your target, and then you turn and head in the opposite direction and provide us with a losing trade instead of a winning one. So that is why when it comes to trading these consolidation setups, I generally exit my trades just within the boundary. So a very good trade was captured here to take advantage of this U-turn, the double top formation, the break of the trend line, and this bearish engulfing candlestick formation, all indicating to us that the market was going to be forming this downtrend as part of the movement that would take us back down to the support boundary and complete the formation of this range setup. So also another example of how we can use the daily chart and the 4-hour chart to take advantage of these movements, and use the strong stop loss areas on the 4-hour chart to protect our trade and to take advantage of these strong and profitable movements.